Alright, so now we're going to go into the income tax withholding, and this one gets a little bit more complicated, but again it's systematic so that it's repetitive in nature. You just follow the same program every time. Alright, so what we're looking at is whenever you start working for an employer, you're going to have to fill in what's called a W-4. And the W-4 form is used by the employer to figure out how much they need to be withholding from you every time they process your payroll check. And so you're going to fill out things like your name and your address, the city and state, and then you're also going to fill in whether you're single or married but withhold at a higher single rate. So the safe bet would be is to have maximum amounts withheld for you, because you don't want to end up owing the money when you file. What you're really doing is when you run your paycheck or your payroll, you're making a deposit, so to speak, every time you run the paycheck. So in essence, that deposit means they're going to be withholding amounts from your paycheck. So with that then, if you want to ensure that you're not going to have to end up paying at the end of the year, then you want to have sufficiently enough amounts withheld. Now, some argue that you shouldn't have too much withheld, because then you're essentially loaning the government money. You're going to get it back through when you process your tax returns, but in the meantime, you're out of that money for that period of time. When interest rates were really high, I'd say, yeah, that's probably true. Now the interest rates are pretty low, so I mean, you could just think of it as another savings account that doesn't pay interest, but since interest rates are so low, you're not really losing that much money. So in any event, let's go through. You're going to fill out this W-4, and then once you fill that out, you'll submit it, and that's what's going to be used to essentially figure out how much is going to be withheld. Now, there are two methods. The first one we're going to use is called the wage bracket method. This is an old school way of doing it, and this is really, if you don't have any computer system involved, you're going to use these tables to compute. So if the employee submitted that they want to claim 0 and they are single individuals and they're paid on a weekly basis, then you're going to get this wage bracket, or single person and weekly. So let's first start. We don't even worry about the exemptions. So single person. If you're married and you want to be, you're going to use this wage bracket, and it goes on. I mean, this is weekly, but you're going to have monthly. There's monthly, and then you could have semi-monthly, and you can have monthly, semi, or bi-weekly. And so those are all different pay period processes. So we're just going to focus on these two because we can't show everything. Okay, so looking at Benito Flores, works for Apple. He is single, claims no withholding allowances. He prefers to get money back, so he chooses those two options. The choice will increase the amount withheld from his paycheck every week. Therefore, he's hoping he won't owe any money and maybe get a little bit of a refund. His gross earnings are $368. Let's remember that, $368. And let's go back 229. So the wage we had was it 368? I think it was 368. It falls right here. Well, first of all, we've got to be in the right bracket. It's single. He's a single individual, and he's getting paid weekly, which is also pointed out. So single, weekly. If it was married, we'd go down to this, and if it was monthly, we would go down to the other ones. But this is the right bracket. So single, weekly. He made 368, so that falls at least 360, but less than 370. And then he claims 0. So we're going to find the intersection of these two, and that turns out to be 39. So that's what the amount that's going to be withheld from him is at 39. So we're going to go to the problem and essentially compute that he will have $39 that are going to be withheld. Another example here is Pat Rowell is married, claims 3 withholding allowances, and has a monthly gross earnings of $27.8050. So let's write that down, $27.8050, and married, so we'll put M, and claims 3 allowances. So we write those down just so that we're clear. Above it, it's married person's monthly payroll. Married persons, he is married, so we can use this up here. And then it turns out that his Earnings is 2780.50, so we'll go up to 2780.50, and we'll look for 2780.50. Married persons monthly. I guess but monthly single persons. This is what we want. 2780. 2780 is right here, and he had 3 exemptions. So 0, 1, 2, 3. We're going to find this intersection here, right here. 2780.50. She's right here, and that's 3. That's 106. So if we go down here, looks like his withholding is going to be $106. It also goes on to say that if he had had 5, if he was using 5 allowances, we could actually look at how the greater number of people, he had 3 before, but if he had 5, he would only have $38 withheld. So, Pat, is that a he or she? I don't know. Oh, he or she, oh, her, I guess Pat is a her. So she would have $38 only withheld. Okay, so that's the easiest way to use the wage brackets. They're pretty easy. They're not as precise, but they work. Okay, they work to make it all happen. Now, another way you can do it is a little bit more technical. And in fact, most computer systems that are built for payroll, they use this method for figuring out how much should be withheld. They just build in the code that follows this method. So the first thing we need to do is we have to understand that there's going to be, we're going to have a gross wage that's going to be computed. And then from the gross wage, from there we're going to subtract an amount based upon the number of allowances. So, and then before we even look at the allowances or how many the allowances have, we have to determine whether or not the payroll period is weekly, bi-weekly, or semi-monthly. So here you'll see the pay period, weekly, bi-weekly, semi-monthly, monthly, and this is just for one allowance, so whatever we know, we'll just have to multiply that amount by the number of allowances. Okay? Once we've taken that gross amount of wage and we've subtracted the allowances, then we'll go down to the brackets, similar to what we did before, but we make it a little bit more complicated, and just like it normally has to be, is a little bit more complicated. I'm going to try to blow this up a little bit. Let's see if I get. Okay. So hopefully you can see from that video. If not, you can get on your textbooks and get a little bit closer to what's going on. All right, so Sarah Brinsky is at Starbucks, is married. Let's write that down. She's married. That's also, she's claiming 2 withholding allowances. 2 allowances. We'll write that down. And then she has weekly gross earnings, so weekly is important. Weekly, and the gross earnings is $690. Okay? So we're going to use the percentage of method to figure out. So the first thing we're going to need to know is, okay, the number of allowances, there's 2 withholding allowances. So we're going to go back to the previous page, 231. And go back to this allowance, and we know that, okay, so she has 2 allowances, so it's going to be $77.90. Let's write that down, $77.90, and multiply that by 2. 77 times 2. What does that give us? Well, let's go see. You can probably compute it really fast, but it ends up being $155.80. So that equals $155.80. So what? So $155.80. So what we're going to use is we're going to take that dollar amount and subtract it from her weekly earnings. So her weekly earnings is $690. That was given. And we're going to subtract the $155.80, what we just computed, from that. So now $690 minus the $155.80 gives us $534.20. Now we have what we call the subject to, that's what's going to be subject to the tax. So we'll take this $534.20, let's write that down, $534.20. Let's remember we're looking for married weekly, and I think that's going to be in the previous page. Let's see, 231, yeah it is. So we're looking for weekly, and on the left side we have single, and on the right side we have married. Okay, so hopefully you can see this. And again, if you cannot, make sure you have your textbooks with you so that you can zoom in as needed. But so we're looking for the 534.20, what we had computed before. So it says if you're over 164, but less than 520, but not over 520, which is less than 521. Well, we're not. We're at 534.20. So we're actually here between 521 and 1613. So this is where we're at, 521 and 16. We're in between that. So how we're going to do this? We're going to take $35.70. Write that down. $35.70. And then you're going to add to that 15% of anything over $521. 15% of anything over 15, let's write that down. 15% of anything over 521. Okay, got that? So if I could get this up here, look, we're looking at $35.70 plus 15% for everything over $521. Okay? So now what we have to do is just go through the computations. So we know we're going to have $35.70, that's what we had figured out, plus 15% of excess of over 521. That's what we just wrote down and that's what we looked at. So now how do we figure out, well, what's over 521? Well, we had 534.20. We're going to subtract from that 521. That's going to be everything over 521, right? So 15%, you can run the math and do it with your calculator, but that difference multiplied by 15% or 0.15 should give you $1.98. So we're going to take $35.70 plus the $1.98 and that gives you $37.60. So what's going to be withheld is $37.68. All right, so that's how the computer systems actually do the computations. They figure out, they program the system so that it runs the numbers just like what we just looked at. Okay, next is another example. You can work through that. That shouldn't be that big of a deal. And you just need to be able to figure out which table you're going to use. Use the exemption or the allowances, and do the numbers. All right, let's move on. We're on page 234. All right, so on 234 now, this is kind of have to be the kind of the conclusion, the summary of everything. We're going to take the gross earnings. We're going to figure out what the gross earnings is, or that's going to be given to us, and then we're going to subtract FICA taxes, Medicare, federal withholding, state withholding, and other deductions. That's going to give us the net pay. So the example we're going to look at is Kizzy Johnston is married and claims 3 withholding allowances. Her weekly gross earnings are $643.35. Her state withholding is 2.5% of gross income, and her union dues is $5. Find her net pay using the percentage of method of withholding. So we've got to do this, and sometimes this seems overwhelming, but if you just take it one step at a time, you'll make it. It won't be that big of a deal. But first, we've got to find the FICA tax. Well, what's a FICA tax? FICA tax is 6.2%. Well, how do we find that? We take the gross amount, the 643.35, and we're going to multiply that, the gross amount, 643.35, multiplied by 6.2%, and that should give us $39.89. So, boom, we got FICA taken care of. Medicare is at 1.45, so we're going to do the same thing. We're going to take 643.35 multiplied by 1.45%, and that's going to give us $9.33. Boom, we nailed it. Next thing we're going to do is federal withholding. So this one's going to be a little bit tricky. We're going to have to take, let's see, Kizzy, we've got to write some things down. Married, let's write that down. Married, claims 3 withholding allowances. 3 allowances, and this is weekly. Married 3 weekly, all right? And so we also are looking for 643.35. That's her weekly earnings. So let's see, I think we need to get back to 233. Probably the one before that too. Yeah, 232. The one before that, 231. Yeah, there we go. So which one we're looking for? Married, weekly, which happens to be the top. So weekly is the top, and we're going to go to the right because it's married. And looks like we've got 3 allowances. Well, before we even get to there, we're going to do 3 allowances. So one withholding for weekly. There's weekly what we're looking for. Weekly is $77.90. So let's take the $77.90 and we're going to multiply that by 3 first. What's that going to give us? Let's see. We're at 234. Is that where we're at? Yeah. So well, then I can give it. We're going to have to figure it out ourselves. All right, so we're going to take $77.90 and multiply that by 3. Let's just pull up a quick spreadsheet here. So $77.90. And then we're going to multiply that by 3, so we'll take $77.90 times 3. The total is 2. Let's write that down. 233.7. All right, and then we know that she made a total of 643.35. We wrote that down, and we're going to subtract from that. We're going to subtract from that the 233.7, so that is going to give us $409.65. That's right then, 409.65. You guys got that? All right, so we got that, 409. Now we're going to go to that table on 231, I think it was. Oops. 231. Okay. And she's married weekly, so weekly married. And we're looking at 409.65. So that puts us really right here. 409.65 puts us right in the first. So she's paying 0 plus 10% of everything over 164. Well, we know we're at 409.65, so we need everything over 164. So what we're going to do is 164. We're going to put that here, and we're going to take 409 and subtract from that the 164. And then what it says is that we're subtract this minus this gives us this, and then we're going to take that number, and hopefully you can still see because I know. Okay, we're going to take this number and then multiply that by 10%. I think it was, yeah, 10%, which is 0.1. So we'll take this and multiply it by 10%. So according to my computation, we're looking at $24.56, but it looks like 57 cents rounded, right? Let's see if that's what they came up with. 2, 3, 4. Yep. So 24.57, 24.57. So that was the federal withholding amount. We figured how that was, 24.57. We came up with 24.56.5, which is rounded to 57. That was a tough one. The rest is pretty straightforward. State withholding, the notes told us that that was going to be 2.5% of her gross. Her gross is 643.25. That multiplied by 2.5% is 1608. And then the union dues were just a flat amount, union. So we're going to add all of these deductions. They come up to $114.87. Now that's what's going to be deducted. So we're going to get the gross earnings and subtract the total deductions. And the net pay is going to be $528.48. You guys got it? So the good news is that if you guys can figure this out, you're ready to open up your own payroll service, okay? All right, so let's take a look at what we have here. Let me bring this up a bit. All right. Now, if you're running payroll then on a quarterly basis, meaning every 3 months within the year, you have to file what are called quarterly payroll tax returns. And you do that by running numbers for the entire quarter. And then you submit, you look at how much you owe and how much has already been paid, and then the difference has to be paid. If the employee of Fair Oaks Automotive Repair pay a total of $789.11 in Social Security tax, $184.55 in Medicare tax, how much must the employer send to the Internal Revenue Service? Well, when they run the quarterly reports, they'll figure out that, okay, they have to match that amount. So $789.11 plus the $184.55. We have to add these two together, and we're going to come up with $973.66. But just like I mentioned to you earlier, when you're an employee, the employer has to match that amount that's being paid as well. So the employer matches it. That means double what's going to get paid. So what's going to be sent to the Internal Revenue Service is what they took away from you, plus what the employer has to match, a total of $1,947.32. Very cool. Let's move on. So this is collected, let's say the manager at a movie theater collected $2,765.42 from its employees for a FICA tax, $646.75 for Medicare tax, and $3,572.80 in federal withholding. Compute the total amount that must be sent to the federal government. Well, we just have to remember one thing. The FICA, or Social Security, and the Medicare have to be matched. So $2,765, that's what was withheld from the employees, but the employer has to match it. So that's that almost times 2, right? So we'll just write it twice. The $646.75, that's Medicare, that also has to be matched. So that's twice as well. Plus the withholding, that doesn't have to be matched. That's just money that they took away from your paycheck, and that money has to be sent to the federal government. So we're going to add all of these amounts, and the total amount comes up to $10,397.20. Isn't that exciting? Now, these are the quarterly reports that I mentioned earlier. They have to be done on a quarter that's called the 941 Employer's Quarterly Federal Return, and essentially just summarizing what occurred during that quarter. Quarters like in on March 31st, June 30th, I think it's September 30th, yeah, and then December 31st. On the 31st, you have to actually do an annual, actually it's due in January, but at the end of December 31st, you have an annual report you have to submit as well.